for this session. I hope it would be insightful for you just to hear what Candi does in the renewable space for funding projects. To get us off started, essentially Candi stands for C and I. I don't know, it's not as transparent when you see it, but if you hear it once, it makes total sense. And that's essentially where we base our model, is in the C&I space. So Candi Solar is a Swiss-based company. It was started by a guy that grew up in KZN, and we currently have operations in India and South Africa. Basically in India, we've been in operation now for about 3 years, and in South Africa, only a year and a half. So we're Swiss funding and we finance renewable related energy and solar PV projects. Solar, we have solar engineers down in Cape Town and up in Johannesburg. And last year we started off with 2 staff, Guy Rice and Conrad, being the first members of Candi South Africa. And we're currently at the staff number of 14, just growing our business. So globally, we currently have about 12.5 megawatts on the ground, and in South Africa we have 15 PPAs and 2.5 megawatts installed. I believe we currently have about 43 customers in our books, and it just goes to show we started off in a year of COVID, and this is where we're growing towards and growing our market. Some of our notable customers is Halfway Toyota, Schneider Electric, and Givaudan. We've offered them each a PPA finance model tailored to their company. So our business model is to collaborate with EPCs and OEMs to jointly grow the renewables market. And essentially, Candi is not an EPC, and you'll see this reoccur in the presentation that I'm sharing today. So this is just a short video on Candi. Please let me know if you guys can hear it. I'll play a short part of it. It would be great to get some feedback. Oh, could you guys hear that?
No, Mish, it's not coming through, hey?
Okay, so I'll share this video separately with Lisa, and she can distribute it to everyone that's joined us today. Okay, so this just goes into the benefits that you guys as EPCs can get from the funding model that we provide. So the EPC work is done by the EPC, which means essentially that we contract with the end user, but we subcontract the EPC work and the OEM work to you guys. So you still get to focus on your core business. It's just to assist you guys with unlocking dormant opportunities that required funding. Like I mentioned, the OEM is also outsourced to the EPC, and we do not dictate equipment that you guys use at your sites. Because this is a Kithia presentation, Huawei is one of our preferred distributors, products that we use in our PV model. And then we can also look at building in an annuity commission into the transaction for you guys. So most of our EPCs actually opt out of this just because it does make a difference in the funding model. They usually build in their margin into the EPC price that they give us. But that being said, there is an option of extra commission to be worked in. So the annuity commission specifically, so we'll charge a client a kilowatt hour price, but as we retain our funds monthly from the client, you'll receive a percentage of that annuity income. So we have efficient EPC contracts, which basically means that as we progress with the project, we've signed the contract with the client, we'll release funds to you guys to procure your equipment. And as we reach the milestones, we'll release more funds to you. It takes us about 2 days to transfer funds out of Zurich, and then an additional probably about 2 days to transfer the funds to you. So it is quite a quick turnaround time on that. Here's just some more benefits to you guys. So we can also look at funding the battery backup and the diesel generators. So as long as it's part of the PV project, we can also look at funding that. We do not disintermediate you from your customer relationship. We're all going into a relationship with a client for 20 years, basically, and we do not want to step on anyone's toes, essentially. So we work with you and the customer to get to a workable solution for their specific needs. So we're not a bank, and we have quick credit decisions and independent funding lines. So essentially, it's equity on our balance sheet, the funding that we receive. We do not go and loan money from banks or anywhere. We have investors in Zurich that basically funds our funding lines. This is just a few benefits to the end user on using the funding model that we provide. This is specifically, I think, more based on the PLIS model that we have. It's a performance-linked installment sale, which we will get into later in the presentation. So it's a service-based model. If the power isn't generated, the end user does not pay. So we are aligned with your customers' interest. It's up to us to ensure that that system is up and running. If the system doesn't generate, the client doesn't pay, and we don't get our returns. We can tailor a solution to a specific client to meet the end user's needs, and they get savings from day one with zero upfront investment. We make use of tax-efficient structures to reduce the costs and shorten the term of the contracts that we provide. So essentially, we make use of that S12B tax benefit that customers receive when they install solar at their businesses. We focus on short-term contracts, which is from the 3 to 14-year mark, and we take full operational risk on the system. Ownership transfers at no extra cost to the client. And then we get to the perfect end user. And this would be important when you're evaluating a client to see if they're viable for our funding solution. So we focus on SMEs and large corporates, owned and managed businesses, and South African based. We're currently looking for a pilot for Africa as well. We're investigating a few opportunities in Botswana and Kenya, which would be quite interesting for you guys that work up in Africa. We focus on private companies with trusts and taxable income. With good credit, of course. If they don't have good credit, we won't be able to give them a funding solution. And of course, what we all look for, you guys as EPCs, and for our funding model to actually be at the most optimal level it can be, we look for a high tariff, a high yield, 7 days a week operation, and consistent loads. This just goes into the perfect end user and actually the deal requirements that they would need to meet to qualify for our funding solution. So recently we did a bit of investigation into different market sectors, and we came to realize that not all companies have audited financial statements, which was how we evaluated customers previously. And especially in the agriculture market, the guys don't seem to have good bookkeeping skills. So we've implemented some new steps in our credit department to assist the guys that don't have audited financial statements. So essentially, if they have audited financial statements, we can look at a project size of 1 million Rand. You'll notice that there isn't a kilowatt minimum, just because we do finance batteries and solar, and that makes a major difference in pricing if you're looking at a 50 kilowatt with battery backup. So it's R1 million, a 5-year operation with 3 years of financials is how we evaluate them. Then there is customers that have independent reviewed financials, which would be a project size of over 2 million. They need to be in operations for 7 years, and they'll be able to supply us with financials for 5 years. Then we get to independently compiled. This is basically a guy just in an Excel sheet putting in the numbers year after year. And basically for these size projects, we look at 3 million and a 10-year operations with 6 years of financials. So now we get into, I think this is quite interesting for the guys that has worked with 20-year PPAs before. This is basically just outlining the difference with our model versus the 20-year model. So the PLIS model is a performance-linked installment sale, and essentially the year, obviously, it's a 20-year agreement versus a 3 to 14-year agreement, leaving that back-end savings open to the customer. We offer ownership on our model, whereas they don't offer ownership on the long-term PPA. Your insurance is much more expensive because it's not part of your building insurance if you go with a 20-year PPA. Whereas with us, we ask the client to take out insurance, but it forms part of their building insurance, making it much less expensive. We also give the client that S12B tax break, where with a standard PPA, they don't get that tax break. So of course, if we minimize the length of the contract, we will be a bit more expensive than the 20-year mark, but again, we'll leave that back in savings open to the client. So essentially, it's a pay-for-use model. Normally, there's different ways. Like I said, we tailor solutions to meet the customer's needs. So the normal one is a pay-for-use, and with the PPA, it's a take-or-pay. And then in the accounting aspect of things, on the long-term PPA, it's an OPEX, whereas we can do an OPEX and CAPEX component to split it for the customer. Now we get into unpacking the Candi model. This is basically the PLIS model that we normally focus on. And essentially, we go into detail with regards to the S12B tax benefit. So how we use that is we are flexible on the amount that they pay towards their system, and we're flexible on the timing of when they pay that amount to us. The VAT of the system is payable upfront because we give ownership to the client, right? And they'll be able to claim that VAT back. That's now the 15% that you usually pay on everything in South Africa. So essentially, they'll be able to claim that back within 1 or 2 months from paying it to us. So the down days are also agreed with the client. So if, let's say if the client has a situation where we haven't taken into account that they have upgrades at their facility, they'll be down for 2 months, we'll look to extend the contract with them. But essentially, if we default on supplying power to the customer, the contract doesn't get extended. They don't pay us for the power that we don't generate. So now we go into the Candi versus bank finance, which would be quite interesting for you guys that has worked with bank finance before. So again, no power delivery, no pay from the customer. Whereas with banks, of course, it's a loan. They'll expect their money regardless if the system is operational or not. They only pay for the power is used. There's no charge for exported power. Cash savings from day one. It's a full maintenance product. The end user carries no risk on the equipment. It's a quick credit decision, independent funding lines, upfront payment, holidays can be accommodated. And of course, we can fund the diesel and storage for the projects as well. The end user obtains the tax benefit and ownership is obtained at no extra cost to the customer. So this is just the contact details and next steps, how you guys can reach out to us. Myself, I'm based here up in Joburg and can assist you guys up here. Liesel Prinsloo is based down in Cape Town and can assist you guys down in the Western Cape if you guys have projects down there. So the first steps would be a collaboration agreement. We call it an EPC collaboration agreement. It's essentially an NDA that we'd like to have in place, obviously just to cover ourselves with you guys and cover you guys in case any issues arise. And then we'll need the deal information from you. If there is a specific deal that you guys have been working on and you'd like to get it across the line, we have a Candi application, and it's basically 10 data points that we'd need from you to put together a proposal and a funding solution. We can also assist you, myself and Liesel, or even Conrad, if you guys have a deal that you feel, hey, we're close to closing it, we'll need some support on the financial end, we can come with you and see the customer to get that deal across the line. So these are just some of our operational sites. We recently signed a 1.5 megawatt project, which would be a great reference for you guys if you ever decide to use our funding model. We also did Schneider Electric. It's on the N1. You'll be able to see that carport structure or even go visit it if you guys want to have a look at how we did that. They're actually planning on expanding and adding some batteries to that solution. It's also bifacial modules that we did on that project. So this is just an illustration of one of the projects that we did and the finance that we were able to offer them. And it's also to give you an idea of what our proposals look like. So for this specific client, we did a 13-year contract term. We were able to give them a 35% discount on their existing tariff, and we used their S12B tax benefit to reduce the cost of their solar system. It was a 317 kilowatt project with a 9.79 Rand per watt installation price from the EPC. So that's all from my side. I think we can go into the questions now and perhaps go into some of the other funding models that we do have available.